Hey everybody, Tom Gentile. Welcome to Tom's Trading Room. Glad to have you here. Monday morning, September 17th, 2021. Where are my glasses at? Got to put on the, wow, I feel like it's 5:30 in the morning glasses. Glad to have everybody hanging out with me here today. We got a lot to talk about here over the next, say, hour-ish. I want to go through stocks, bonds, currencies, commodities, cryptocurrencies. I also want to dive in. I want to look at Facebook today because Facebook is a very interesting trade, very interesting opportunity we're seeing with Facebook. And I want to show you how I bring up a trade that I like to refer to as the 1-inch putt. What is the 1-inch putt? Well, you'll find out what that is here soon enough. It has been a while since I've been on Facebook Live doing live streaming, but I will be bringing it back, and we're actually going to be bringing it back in a very big way. And my team and I, what my plan is that my team and I plan on doing live streams every single day of the week. That's the plan. Now, whether that actually happens, obviously is yet to be seen, but we're working on it, guys. We are working on it. Daniel, glad to be back. Southside PR, welcome to the program, guys. I think I literally spooked everybody. I didn't give you any warning that I was going to be back on today. I just decided I had a little bit of time here today, so why not get out here and show some love to the YouTube community. But like I said, starting very soon, and I believe that's going to be as of next week. We are going to be coming to you live. I'm going to try my best to get you guys live for my team and I every single day of the week. And not only that, we're going to have special focus on different strategies, okay? It's not going to be me sitting here, looking at this all day long going, oh, it's going up. Oh, it's going down. No, what we're going to do is we're going to get into things like, Monday is a great day to review what's going on last week and see what's happening for the week going forward. But what we want to do is we want to take, for instance, Tuesday and really get into volume. And then Wednesday, I want to get into seasonals. And then Thursday, I want to get into contrarian strategies. And then Friday, we have the big wrap up. But we want to try to focus each day on something a little bit different, a little bit of different topic, so that the key here with the YouTube community is learning, is getting an idea, not me just giving you the fish, but teaching you how to fish. And hopefully you pick up on something that my team and I do, and it resonates with you, and you say, yeah, that's the way I want to trade. So that's the plan, guys, kind of going forward, and expect to see a big kickoff of that sometime next week. I'm going to move my screen just a tad here so that I'm right in the center. There we go. Hey, how about we do this too? Ooh, there we go. Zoom it up a little bit. Hey, there we go. Bill, good morning. Joel, glad to see you. Jerry, also good to see you as well. What we're looking at right now is we are looking at a chart of Facebook. I'm going to come back to Facebook. This is a daily chart of Facebook, and I'm going to explain why I'm looking at Facebook. For those of you just popping in with me this morning, I'll give you an idea on exactly why I'm looking at this, not as a day trade. This is not day trading, folks. All right, I'm actually looking at this as a trade into mid-October. Why? We're going to get there. All right. Give me a little time, and we'll talk about exactly why I like Facebook. Not today, not tomorrow, not even at the end of the week, but I really like it going into about 3 weeks from now. About a 3-weekish trade that we see happening with Facebook. We'll get to that, and I got 2 ideas for you in terms of how to play Facebook, depending on the type of trader you are. All right, so let's start with overall markets. So let me bring up the screen that you now see, and this is, I have 120 days on the chart. I don't think I need that much. I think I could easily get away with 100 days, because 100 days takes us back to the beginning of summer. And so now we have officially ended summer. All right, last week we jumped into fall. Although if you live in Florida, fall's not here yet. Fall won't be here for another couple months. All right. Hey, Jeff Beard, how you doing, buddy? So, guys, what are you experiencing fall anywhere you're living right now? That's a question I want to tag to everybody on the stream. Where are you coming from, and how hot is it? Because it's hot here. All right. That's what we see. Morning, Jim. Glad to see you. As we're kicking in some answers there, where are you coming in from, and how hot is it, and does it feel like fall? I left New York, I think, at precisely the wrong time, because this is the time to be in New York. The time to be in New York is when the leaves are falling off the trees, the colors are changing. That's the time to be in upstate New York. I had to leave. All right, I was getting kicked out of my home, so I was getting kicked out of the home because I got renters coming. But anyway, no fall in CA. PA, fall has arrived in Pennsylvania. Awesome. Hot in Texas. Yeah. Texas and Florida have pretty much almost the same thing in common if you live in the right part of Texas. And it's just hot most of the time. You guys get a little bit more of a seasonal change than we do. But anyway, let's take a look at possibly the seasons changing here with the stock market. And I'm going to tell you why I don't think that's going to happen right away. But if you take a look here at the stock market, and let me grab because I came on, I made a quick decision to jump in and be part of the YouTube community today. And that is, I literally did this 5 minutes before I looked and I said, hey, I got an hour blocked that I'm not doing anything right now. No, don't go have breakfast. No, don't sit back and watch mainstream media. Jump on YouTube. Have some fun with the gang. And that's what I'm doing right now. Trying to bring up the big, there it is. The big toggle there, the big mouse. Okay. So 405 low, higher lows at 415, higher lows at 425, higher lows at 435. This actually back here. All right. This move that started right after Labor Day, all right, took us down. It's going to be hard-pressed to see if September ends on a positive note. For September to end on a positive note, we're going to need 3 days like we had on Thursday. 1, 2, 3, all right? And 4. Take us through the 30th, 27, 28, 29, 30. We're going to need 4 good days like we had the last couple of days to see a positive end to the month. Don't expect that to happen. But I do expect to see higher highs in October. Now, some of you might be saying, Tom, there's no way October is going to have higher highs. I heard October is the worst time. Let me say it again. I heard October is the worst time to be in the markets. Well, if you heard that from Mark Twain, then I can understand, because Mark Twain, we all know what Mark Twain was famous for, but do you know Mark Twain was a trader too? He said the worst time to be in the markets were October, followed by September, followed by November, December, January, February. Obviously, he was not a good trader if he found that all 12 months of the year were the worst time to be a trader. But I'm going to show you why I think October is going to shape up to be an interesting month. So take a look here. Let me bring up a new chart in tomsoptiontools.com. All right. Take a look at something called the money calendar. Now, this is the money calendar for September. Great. So we went through the mess. Here we are. Look at this week. 27 to the 1st. We get from 70% bullish to 85 to 90 to 86 to 93. What does all this mean, Tom? What this means is that what I like to look at is the most popular stocks out there. This is not stuff that is being traded by a handful of people. These are stocks. We follow the top 325 stocks. The top 325 stocks are the ones traded by most people. They are the crowded trades. They're the ones that have millions of shares daily. Some of them, many millions of shares daily. What we do is we then look at minimum of 10 years back, and we see, do these stocks have any patterns anywhere on the calendar? Now, we group those together, and we determine based on the ones that do. In order to be on this list right here, you have to have a 90 to 100% accuracy reading over the last 10 years, a minimum 90%. So when I look at this and I see all this green, it tells me that the majority of these stocks have patterns that have gone 90% higher starting on the 27th, starting on the 28th, 29th, 30th, etc. All right. Now, what I also do is I look at the individual stocks. All right. So if I pop up the 27th, one of them that's on the screen is Apple. There's a 21-day trade on Apple. All right. Great. That's awesome. I see Lamb Research on here. I see a lot of them on here. Now, I like to rank these in a lot of different ways. So I don't just take the first one I see and start trading it. I want to do some vetting. But look at eBay. eBay is on here, and eBay is a 27-day bear. That means that starting today, going forward 27 days, eBay typically goes down. Right now, I can go in and look at these stocks. I haven't even started looking at the stock market yet, but as you can see, this says between September 27th and November 2nd, eBay is a bear. It's a sell. Last 10 years, it's made money as a sell every year except 2015, where it ended up going up $2.65, meaning if you bought it on the 27th, you sold it back on November 2nd, you would have lost $2.65. But every other year it was a buy, or excuse me, was a sell, was a short. These greens mean that if you shorted it and it went down, you made money. All right. So I look at these, and based on this information, I then try to create a low-risk trade on this. Buying puts as an example, buying put spreads as an example. These are some things we could do looking at eBay. But I'm not here to talk about eBay right now. I'm here to talk about the money calendar. When I go look at the month, you can see that we've passed through the area of September that tends to be the rocky part. Now we should start to slow down a bit. All right. All that news out of, again, what was going on last week. All right. We had a lot of news last week. The latest was China, again, banning Bitcoin. It's China. We've heard it enough. All right. We've heard it. You've said it a dozen times. We don't like Bitcoin. We don't want anyone in China trading Bitcoin. We're going to take down all the exchanges in China that trade Bitcoin. We don't want Bitcoin. We want to ban Bitcoin. We're banning anything Bitcoin. We've heard it. We've heard it enough. It's almost becoming a religion in China. No Bitcoin. We got it. You don't need to tell us anymore. In fact, the reason you don't need to tell us anymore is because the more you say this, the less you're getting a bearish move out of cryptocurrency, right? We had a little bit of a drop on Friday, but did you see what happened on Saturday and on Sunday and on the rest of Friday? We had the bounce back. We had the bounce back on Bitcoin. Let me just bring Bitcoin up for a second. I'm actually going to look at the Bitcoin futures contracts. So that's /BTC. Real time, baby. Real time. So take a look. These are day moves in Bitcoin, where remember back in the 20th and the 21st and the 23rd, where we were down below 30,000 and we ripped ourselves back up to that 52,000, that sell-off there. Do you realize the sell-off that happened at the highs of summer? That was when El Salvador said they were taking cryptocurrency. That was a sell to news event, and it flushed out a lot of profit taking, and it flushed out a lot of people that got long up here above 50,000. Took us down to 40. But you know, those last couple days, that area where we went from the mid 40s to the low 40s, that was all China related. That was not even that move did not eclipse the move that happened with El Salvador. What's happening is China starts to talk less as it continues to bash Bitcoin. We're getting less and less of movement. This tells me more and more people are ponying up and in for the long haul. And as you can see, we had coming into last night, we went from the lows back up to the midpoint of Bitcoin. We were back up to where we were just a week ago. We'll get back to Bitcoin. We'll get back to Ethereum in just a moment. Let's pop back over to the money calendar. And the reason I brought this up, and I moved out of the way. Sorry, guys, that's my ADD working for me. It does have advantages. ADD does have advantages as a trader, because if you have three screens you're looking at, you're constantly bouncing back and forth. You don't miss anything. You miss everything, but you don't miss anything. Those of you that know what I'm talking about, if you've got that same focus thing that I have, it works as a trader. doesn't work so much in the rest of life. That's why I turn this thing off. Because if I looked at this all day long, if I turn notifications off as much as I possibly can, because it distracts me. Now, let's take a look at why the money counter. Because take a look into October. We're going to take a look at this next week too. But look at the month of October. Do you see any bearishness in October or November? I don't. Not on the most popular stocks. The reason I see all this green on the screen is because over the last 10 years, there's been a shift into bearishness in the market. October has shifted to mid-September, and it's also shifted to the first couple weeks of January. Because once we get into October, my seasonality antennas come up, and I start thinking about holidays. And I start thinking about, hey, guys, forget Halloween. The candy's already out. I know. You can see it already on the shelves. Go to the retail establishment. In fact, I would be willing to bet before October's over, we'll start seeing Christmas trees. We'll start seeing the big blow up, holiday stuff. That'll start showing up in big box stores. I'm telling you, Home Depot and Lowe's, they must have a contest as to see who can get the holiday stuff, the holiday crap, as I like to call it. They would like to have a contest to see who can get that crap out in the front of the store as quick as possible. I'm going to be watching. I want you to help me out too. Tell me when you see the first bit of holiday stuff in the retail stores. Where was it? Where did you see it? And what day did it happen? What day did it first come out? Because it happened around Halloween last year. I wonder if they're going to push it even further. Because these big box stores, you're competing against Amazon and even Walmart.com, and Best Buy. You're competing against powerhouses. You got to get your stuff out early. And so that's why you're seeing, Black Friday long gone. And no, it's Halloween. It's before Halloween. So interesting. Christmas stuff is already in Cracker Barrel. Michael, doesn't Cracker Barrel have Christmas stuff year round? Isn't that pretty much Cracker Barrel's, spiel? Costco's already there. All right, I got a Costco that's about a couple miles away. I guess I got to go check out Costco today, Jill, and see if the Costco here in Southwest Florida, the one in Sarasota, is throwing the Christmas stuff out already. Or do they just have it in a couple of the aisles down the middle? No, I'm talking about front and center, hit you square in the face right when you jump into the store. All right, enough of my ADD. Hey, Carlton, good to see you, buddy. So let's pop in here and let's go back and take a look at the S&P. All right, so I've looked at the S&P just as a chart. Let's add a couple things on. What's the volatility look like? How many of you option traders are here and you're looking at volatility on the overall market? Because if you look at the volatility in S&P, this is what it looks like right now, folks. It was high back in May. All right, it was up in the 22, 23 range. That's the red line you see. The lowest was at the end of June, at around middle of August, and then right around just after Labor Day when we were poking the 9 area. Yes, we went from 22 to 9. What that means, if you take a factor of 22, I'm not going to bring up the Black-Scholes option pricing model with everybody this morning. I'm too tired to do it anyway. Okay? You guys, if you know anything about me, my family's an Italian family. They stay up until 2 in the morning every night. Even if people got to get to work and get up in the morning, they're still up at 2 a.m., sipping the espresso, going at it, talking, until we all fall over. So, yeah, it's early. And if you're like me, you don't need me to throw the big chart, all right, the formula for the Black-Scholes option pricing model. You don't need the formula for volatility. All you need to do is look at that chart. And that chart says it was high in May. It was blipping up in July. It blipped up last week, and it's come down from a 21 to a 12. It's almost a half off. This is good. This tells us that volatility wants to drop back down low. I would not want to be long UXVY. I would not want to be long VXX. I would not want to be long VIX. I would not want to be long any of these right now. They had their moment in the sun, right? If you go back and you look at this money calendar for a moment. You see this? Not this one, September. Let's take ourselves back. Start to put yourself in September and right out here around September 9th and 10th, and again after the 15th. Now, let's take a look at 9, 10, and 15. Here's September 9th trading around a 12. Here's September 15th trading around a 12. And then 16, 17, 18, 19, we're up here at 21. That was the time to be long the VIX. That was the time to be long UVXY. That was the time. Christmas trees. Gary says Lowe's in Texas has Adam trees out last week. Wow, they're already doing it, guys. I guess the end of summer, they start putting the stuff out now. Got to start thinking about the holiday. You know what they got to start thinking about? They got to start thinking about that $3.5 trillion bipartisan. I'm not quite sure it's bipartisan because they don't have enough votes to make it pass through the Senate. The bipartisan stimulus bill, because they're thinking, retail stores are thinking about how they're going to get their hands, on some of that stimulus if it passes. We need to think about that too. If that stimulus passes, you're going to see everything asset related go higher again. By how much? Who knows? But it's going to go higher. You know, some of us out here might say, well, what's the stimulus? What's the debt clock look like right now? What's the debt clock look like? Anybody have an idea? Because I didn't even bring that to the table today. DEBTCLOCK. Debt clock, United States. Let's see if I can get something here. National debt clock, real time. Hey, who changed, while I'm waiting, who changed their Apple to iOS 15? Whew, that takes some getting used to. There's the debt clock. Let me bring it up here so everybody can see it. Oh, you know what? I think everybody can see it if I just go ahead and I'm going to mirror my phone. How about that? Let me mirror the phone to the screen real quick. There we go. All right, that's going to take a second. I want to show you the debt clock because I want to show you some ways that some people, and I don't think it's a bad way, I think it's actually a pretty good way, how some people get an idea of how they think the stock markets could perform based on the debt clock. Where's my password at? I'm not seeing it. Let's try one more time. Otherwise, I'm just going to blow the thing up. I'm going to blow my head up, and we're going to see it that way. The debt, yeah, it's not coming up. I don't know what's going on. All right, forget it. Let me just do this. So take a look at this one number right there. You go. Look at that. Oh, isn't that a beauty? Let's just put that on the screen for everybody. In fact, you know what? There you go. There's my debt clock. Quick question. Is that actually coming in right? Or is it backwards? Because it looks backwards to me. That debt clock, by the way, is north of 28 million and climbing. Now, if we add another 3.5 trillion to this, which, by the way, if we add another 3.5 trillion to that debt clock, you know, the government, Joe Biden says that it's not going to raise the debt ceiling. It's already going to be paid for because rich people are going to pay for it and corporations. How many times have we heard that? How many times have we heard that? First of all, you know, rich people are going to pay for it. Yeah, I think it isn't rich people that are going to pay for it. It's the folks that make above a certain amount of money that aren't smart enough to figure out how to keep a lot of that. That's who's going to pay. And then guess what? It's going to trickle down to the middle class, because if we do get an uptick in the debt, we get a flushing out of money, what's going to happen? These already expensive things that we're paying for are going to get more expensive, right? So what some folks will do is they'll look at that $28 trillion. I might have said billion by mistake. $28 trillion, and they think, okay, another 3.5 trillion is going to go on top of that. That's at least 10%. Stock market's going up another 10%. It's not the way it works. And we all know that now because of the past. But it does affect asset classes. When we flush more U.S. dollars into the system, it basically cheapens the value of the U.S. dollar. And then everybody gets a tax. not just rich people, everybody. All right. So how do you combat that? You buy assets. All right. You buy assets that go up when the US dollar goes down. I know I deviated from our normal talk this morning, but I wanted to throw that out there for you guys. All right. Let's take a look at the chart once again. Why do I believe we're going to be going up here? Let me blow this up. This is important. Why do I believe we're going to be back up in this area? Because of a couple of reasons. Number one, we are looking at a stimulus package that eventually, you know what, may not be $3.5 trillion, but I believe it will pass. I believe they're going to negotiate like they always do, you know, red versus blue, the red pill, the blue pill, you know, they're each one's the enemy until they realize they have to come together to get a score. And then Democrats say, oh, we did it. We passed this for you. And the Republicans say, hey, we did it. We eliminated a lot of pork barrel stuff in the bill. So we did this for you. Ultimately, all they're doing is they're doing it so that come election time, they stand a chance of being back in for another term. Anyway, that's one area that I believe that could push push the markets higher. The second thing is that we are going into a seasonal high. I just showed you 27, 28, 29, 30, October 1st, the entire month of October, the first week of November. And then we roll into what? Holidays. Here's the other thing. Now, here's the one thing that could hurt things a little bit. And that could be Q3 earnings. All right. Now, Q3 earnings start out strong and then they end weak. When is Q3 earnings going to happen? It's going to happen in October. All right, we're going to start seeing some stuff trickling in next week, but then you get into the second week and the third week of October, and we start to hear more and more about the strong earnings. I think that carries us very well into mid-October. Then, as we get into the end of October, it could deviate from the plan. Okay? Rice Man, you tried Holy Cow. Isn't that great? It's like a hole in the wall up there in Red Hook, but really, really cool place to go check out. You know what? Those of you that are in upstate New York too, I got another place for you to go check out. All right. It is the Tuthill Farms Distillery. I'm going to do a video on this. I took some footage. Tuthill Farms does the Hudson whiskey. All right. They do Hudson whiskey. My wife and I went on a whiskey tasting tour. And we actually ended up, it's a long story. We have a barrel. We got a barrel that's being delivered to us. And a very, very cool story behind it. I'll save it for another time. Maybe if I have time, I'll get into it today. It's really cool. If you guys want to hear the story, let me know on the chat. I'll give you the story. It did benefit charity. I don't just go out and buy barrels of whiskey to add the barrel to my lanai in the backyard to put something on. There's a purpose behind it. But I'll tell you the story. If I have a little time, I'll tell you a story before we finish today. All right. So seasonally, markets are looking to go higher. We roll into strong earnings at the beginning, and then they get weaker. This whole idea about that hedge funds sell off losing positions into the second week of October really isn't a good story anymore, especially when we're buying more and more positions. All right. We're buying more and more positions as a hedge against the US dollar. As the US dollar gets flushed out, there's so many reasons why if you sell things, and I trimmed some positions in September. That's just a smart thing to do. But I think the dumb thing to do, if you're really going to look at this on a long-term perspective, is hold the US dollars just simply isn't the smart thing to do. If you go back in time, since the 70s, you know why. You know why that is. All right. Why is this era any different? And yes, there is going to be a pullback eventually. There's got to be. It's been too easy. It's been too easy for a lot of people to make money. But I don't see people backing up the truck like they did with these big stocks, like they did with smaller stocks, the Wall Street Bets crowd. Okay. I still believe in mean reversion. When something pops really hard, get ready for the pullback. All right. If something drops really hard, get ready for the pullback, the pull up. And that's what we've been seeing. So, There. Let's move on. Let's just take a look at a couple other reasons why possibly the stock market could be heading higher. Here's the bond market. The bond market has literally been in a box. It's been in a box since June. All right, we hit this high back in the middle of June at 146 on TLT. We went through it, and that resistance became support, and is still support today. All right, I would say we trade above 152 and we trade below 146. The bond market will then start to dictate what the stock market's going to do. Right now, the bond market has nothing to do with the stock market. In fact, it had a little bit to do with it this morning. All right, we saw bond yields in Germany that affected the stock market. We came in. Take a look at this. This is the E-mini futures contracts. This thing trades 24/5. That means 24 hours a day, 5 days a week. Let's look at the 5-minute bar. I'm going to take you back to last night. This is last night. This is 44.72. That was the high at 2:10 a.m. Eastern time in the morning. And we were at 44.72 and we're at 44.32. This thing dropped 40 points. It dropped 1%. From 2 a.m. all the way down to about 8:30. And it's been kind of clustering around this 8:30 area. All right. So, again, that was because of some things that happened overseas. But we saw what happened overseas last week. Big news. And what did it do to the markets? It popped it down. And then the mean reversion traders came in and said, where else are we going to put our dollars? We're going to just hang on to these things as the government continues to devalue them. No, we've got to put them to work. So there you go. So that's the E-mini. But the bond market, not really pushing the stock market on a day-to-day basis. How about oil? This is the one, I got to tell you, this is the one that's got me stumped. Because I look at oil and what I see is a bearish seasonal pattern between now and let's call it mid-February. And the market doesn't believe so now. I took some money out of the short side once already, and that was back in August. But we see this move that's taken us to new highs. Now, the conservative trader in me is going to do this. I see all this resistance right here, just above 51. 51, 51, 51, 51. We're above 51 right now. A close below 51, and that to me is a conservative way to get short USO and to get short oil. So we could look at things like stop orders where you do a sell stop on USO, or you could use a sell stop. You could use that oil, that price, if it goes below a certain number, to trigger an option trade. Those are called contingency orders. So see if your broker offers contingency orders. I like those. All right. I like contingency orders. Another great contingency order, if I were to go back and I were to look at Bitcoin, because you could do this in Coinbase. If I look at, now this is the Bitcoin futures. This is a little different, but I mean, stick with me here. Look at last week's highs. Last week's high was 45,379. There was a lot of area right here around the 45.2, 45.1 area. But I mean, 45,250, for instance, if you were to go in and you said to yourself, I like Bitcoin, but I don't want to trade it if it's trickling down. I want to trade it on the bump up. I want to be part of the bump. If you want to be part of the bump, set yourself buy stops where if it hits a certain area, you can buy into the move, right? Now with Coinbase, you would need Coinbase Pro to do that. You can't do it with Coinbase. You got to use Coinbase Pro. Coinbase Pro allows you to buy stops. So they have an area where once the coin comes up to a certain level, you're in. Now, there's no guarantee that it's going to come up and tag you and go right back down. That could happen too. But I like getting into these crowded trades. And you see a lot of folks use sell stops like this sell stop to the downside that happened rather quickly. This could have been a lot of sell stop related information. You can't do this on just Coinbase.com. You have to use their Pro website. And if you have the Coinbase, it's easy to get Pro. You can sign up for it. You just use the same account. You move money between one account and the other. All right, back to USO. And I was talking about commodities. And so let's take a look at gold. Now, gold had something. I'm working on something. Those of you in the room right now, who in the room is an Optionetics student? Give me a shout. Any Optionetics students in the room? Because if you're an Optionetics student, then you probably know about our software. all right, which used to be called Platinum long ago. Okay. And we went from Platinum to Tom's Option Tools. And Tom's Option Tools is just really Platinum on steroids because we have all these other features that we do. But I got something brand new I'm working on. Nobody knows about it. Okay. Me and a programmer know about it. And so we got this thing and we're calling it Panduo. All right. Because that's the code word. That's the only thing we could come up with. Panduo. I'll tell you a little bit about Panduo. Panduo was a way of looking at two stocks that relate to each other, where we look at stocks that squeeze in and back out from each other. Pairs trading is what it is. A whole new level of pairs trading. We've been looking at pairs trading. What we stumbled upon was when two specific stocks, and we've got dozens of them, when they come together, the stock to the bottom, when they spread, once they come together, the stock on the bottom provides a bump to the stock on top and actually gives it a push. All right. It's kind of like, when you look at, what am I thinking of when I see, Olympic Games where, you see teammates where they push each other and they give the person a boost. These give a stock boost. Might have to call it stock boost. Anyway, stock boost just gave a signal on GLD today. Now, again, this is the first one of these that I've thrown out there to you guys. And, we look at, for instance, the gold to silver ratio is one way of looking at it, or gold to platinum, or gold to palladium ratio. And so we're looking at some of these ratios, and they're telling us the gold right now is about to get a push. Now, what's going to happen is that either let's call GLD stock A, and we'll call platinum stock B. If stock B pushes stock A, pushes against stock A, one of three things are going to happen. Either it's going to push stock A to go higher, or it's going to push against stock A and drop back down, or it's going to push against stock A and they're both going to wiggle a little bit. So, yeah, there's no guarantee. But we've seen some really good results with this. Some really good results going back years and years. So you'll be hearing about the words Panduo. Those of you that trade with us, and those of you that use our options, our option tools. Panduo is something that's going to be coming, and we've got a lot more testing to do. But I did see a trade come up on GLD on Panduo today. I wanted to make sure that all of you knew that right now is a Panduo buy. All right, we'll see where it ends up going. But GLD right now is coming down. When you look at this thing, it is coming down. It's hitting some support down here as of Friday, hitting support down around the. We got support at just below 162. All right, this is the 24th. But let's go ahead and kick the latest up and look at the latest chart. And that's going to take me back to SPY. But let's take the latest chart of gold. Yeah, so gold's got a little bit of a pop this morning. All right, it's coming off the open, but a little bit of a pop. Nothing major. That's fine. Gives me time to Panduo up, if you will. So that's GLD. If we were to look at the others, Apple getting a little bit of a pull back this morning. All right, down a bit more, 143.85. I've got some really good support on Apple down here at the 142 to 143 level. Also, Apple has come in and it's starting to show us flash a couple different signals to us. It's flashing money calendar signals. It's also flashing darknet signals. So it's doing something that I like called the 1-inch putt. And I'm going to refer to the 1-inch putt here in just a moment for the rest of our time together. 1-inch putt is when we get two signals that are completely different from completely different strategies, giving us buy signals. In this case, Apple is one of those. So take a look here at Amazon. Amazon.com has really, it's really mimicking the stock market quite well, where we've seen this pullback. We saw a little bit of a move higher. We're getting a drop again today on Amazon. Amazon closed at 34.70-ish. And now we're down here around the 33.50 area. So it's getting a little bit of a drop again today. Boy, what happened to those days when we were at 3,700 and moving higher and everybody had 4,000 targets on Amazon? And now, the target on Amazon looks like you go look at the numbers that happened back there in August. At the end of August, we were down 3,200. That's the targets we're seeing now for AMZN. All right, so take a look here at Facebook. So Facebook's off a little bit right now, 347.80. We're going to talk about why I like Facebook, not today, not this week, but going into mid-October. Also something called the 1-inch putt. I'm going to detail that out for you here momentarily. Netflix. You know, Netflix did something I didn't expect it to do with all of the competition that's out there with them over the course of August and into September. It went up, right? You got Disney Plus, you got Hulu, Vudu, God knows how many other ones, Peacock. Everybody's getting into the pay-to-play routine. And, you know, a lot of this was technically motivated because we broke out of that 550 high and we went all the way up into the low sixes. A little pullback today. But I also think there might be a little bit of backlash happening with, with channels like Disney Plus, who are out there charging you $20 a month. Is that what it is? $20 a month for Disney Plus, and to watch the new movies, the brand new movies, you have to pay on top of that. So it's like I'm paying to get into Disney Plus so that I can pay to watch a movie. You know what that reminds me of? Paying to go to my gym so I can pay a personal trainer to help me work out. That doesn't sound like a pyramid scheme. Anyway, I think a lot of that did benefit Netflix in a sense. But you can see their Netflix going, it was coming off its highs. Google is the strongest of the FANG stocks, seeing where it was at the beginning of summer, seeing where it is right now. Had a nice move up, filled that gap that happened last week. Within 3 days, that gap was filled. And so Alphabet seems to be really bucking the trend that's happening with most of the tech stocks out there. And then that takes me to the last stock I wanted to throw up here on the board before we get into the 1-inch putt, and that is TSLA, Tesla. All right, so, Tesla really is, I think, when you think of clean energy, Tesla is definitely a clean energy stock, and I think that's kind of where they're migrating to. Yes, we hear about the cars. Yes, we hear about the competition with cars. I think Elon Musk has it great where he is getting hot and heavy into batteries. He wants to be the battery king because that's where the money is. Okay. And so I think that's just like Apple. I'm watching Apple, and Apple's getting bad reviews on the 13. They're saying the 13 is really just not much different than the 12. I love the new iOS. Some of it's going to take me a little bit of time to get used to because I'm old. I don't like change that much. But I do I do think that Apple, it's not about the iPhone anymore. It's about subscription services. It's about everything else that the iPhone was foundational for. Right? So that's where Apple's going to continue to make the majority of its money. With Amazon, it's about AWS. Okay? With Tesla, it's about what's underneath the car. It's not about the car so much anymore. And of course, Elon Musk keeps coming out. What was it last week? He's building a robot now. What is it? What are we going back into? iRobot's going to happen? I don't know, but it's the technology and it's the areas of where they can eventually make the most money. And I think the most money is made with batteries. So I got a couple videos I'm going to be doing here soon that I'm going to be talking about clean energy. And I'm actually going to be doing them from the clean energy vehicle that I picked up, a couple months ago, that I'm just loving, that Armageddon thing. So I'll be doing some stuff with that real soon and sharing that with everybody here on the screen. But there's a purpose for it because there are two companies that helped outfit my Expedition vehicle that I think are great long-term plays in the area of clean energy. We have a clean energy government that's pretty much running the place now. And so why would clean energy not continue to move higher? There are some parts of clean energy that I think pose some problems, and I'm going to stay away from those companies. And I want to get into those companies that are dominant in clean energy that I think will continue to be dominant. So be on the lookout for those videos. They're going to be coming out real soon, guys. So that brings me back to Facebook. So let's take a look at Facebook for a moment. All right, a couple things about Facebook. Number one, Facebook. All right. So it has mimicked the stock market quite a bit. It had some great blowout earnings. It's got earnings coming out in another 30 days, right? And as we get to earnings, take a look at this. This is the other thing you want to see, is that right before earnings, we had that big kick up as everybody was waiting to see these great blowout earnings that Facebook had. They had them, and we got the mean reversion. So what's going to happen as we get into the 30 days? Right, if you take a look here, this is the end of July. Take a look at the end of June. The end of June to the end of July, we did see that pop back up. I expect to see that now as we are now approaching the end of September. We should see that move up prior to earnings. And that's number one. Technical. Let's take a look at seasonals. So seasonals, if I go back to the money calendar, I'm actually going to go to the money calendar app because Facebook did not come up on my money calendar chart today. And I was wondering why. I was like, why is Facebook not coming up? Because I know Facebook goes up this time of the year. What I didn't know till I looked is that Facebook's not been a publicly traded company for over 10 years, which is why I'm not getting 10 years worth of data and why Facebook's getting kicked out before it even has a chance. But when I go back and look at it, let's go back and look at trades that are starting within the next 10 days. Go back the last 10 years and show me the top 10 results. And that's what I'm doing right here. Click on show and kaboom. There you go. Today, the next 24 days, we see Facebook moving higher. Here you go. So let's get some details. So what this says is that between now, there we go. There's September 27th, all the way into October 28th. All right, includes, this is trading days, all right, 24 trading days. But you can see here, we have a net profit of, and this is the last 8 years. So we have 7 and 1, 7 years. This was a winning strategy, buying it now, selling it a month from now. So you got 7 out of 7 and 1, that's 87%. The largest trade, the largest profit year that we had a profit, it produced $36.79. When was that year? All right. Well, for me to look at that, I got to go to the trades area. And I see the trades detailing out from 2013 when Facebook became public and all the way out to 2020. There's your biggest year, $36.79. And you can see here it was last year from $9.24 all the way out, moving out to the end of October. See that nice bit move where we saw those higher highs and higher lows. It just stair-stepped this right up. And I'm believing that this area, this gap here that happened last year was when Facebook announced earnings. But you see this big move we see that came up, and then we dropped and we came up, and then even here, we were right around that. This is, look, guys, 10-12, 10-14, all right? This is the area mid-October that I like because you got that little surge that happened. So I'm looking at that and I'm saying to myself, all right, we got Facebook fundamentals, earnings coming out. We got technicals, higher highs, higher lows. We got seasonals happening. Is there anything else that could push this thing higher? Let's take a look. So I want to show you one more chart of Facebook. So let's go back to stock charts and let's look at a chart that I refer to as darknet. Darknet signals on Facebook. And there's your darknet signal on Facebook right there. Friday, we had a buy right down here at around the 345 level. All right. And of course, Facebook ran up and it really seared the deal. Seared. I said seared, didn't I? I meant sealed. Seared. That's what I was doing with tuna steaks over the weekend. I was searing them. But you can see here, that big move up. We got a little bit of a pullback today, but this is a darknet buy. Darknet trades usually end up lasting an average of 30 days. So when you add all of this up, this puts us into mid to end of October on a number of different areas. So there you go. And that's darknet. So how do we trade this information? Let me show you how we trade the information. This is one way of doing it. So in this case, we're looking at, this is actually a credit spread. So this is the high probability trade. So what we're looking at doing here is, this is an example using puts. So if you want to put yourself in an area where even if Facebook goes sideways, you can make money, this is a way of doing it and limiting risk. It has a higher probability of being right. The reason it has a higher probability of being right is because even if Facebook stays right where it is, this thing has the ability to make money. All right, if it's at or above the 355 level, you max out the trade. However, if it goes down at or below 340, you have a maximum loss. If you're bringing $500 in on a 15-point trade, I only have two hands, but 15 points, what's 15 minus 5? 10. 10 is your risk. 5 is your max reward. If the stock stays where it is, goes higher, you make the 5. If the stock forces its way down, you could lose up to 10, but no more than 10 points. What are we doing? That's the example I'm showing today, is selling the October 15th 355 puts, buying the October 15th 340 puts. And that's an example that as of the close of Friday, probably get a little bit better trade today, but as a close of Friday, this is sitting around. This on the web. Oh, thank you, Siri. So as of the close of Friday, this was trading a little bit more than a 5-point credit. Right? Might be a little bit better right now. That's if you're a high probability trader. What's the high probability trades always come with a greater risk than reward. That's the trade-off. If you want something that has a better than 50% chance of working out in your favor statistically, you're gonna pay for it. Okay? Think about this. Las Vegas, casinos everywhere, almost all of them have a roulette table. When you play roulette, if you put your marble, if you bet on red or you bet on black, it's a 1-to-1 payout. The house has a slightly better odds because there's usually 1 or 2 green on the screen, so they know over time they're going to get that payout. That payout is somewhere around 48%. All right, that they're going to pay out. That means 52% of the time they're going to be right, and they pay a 1-to-1. On the greens, if you're betting on 0 or 00, right, the chances of that happen is very, very slim. But if you hit that, your payout's going to be much greater. But they have factored in that payout's going to happen so little that even if they do pay it out, they're going to get it back, right? So they have a high probability trade where if you're betting on green, they know when that roulette wheel spun, it's probably not going to hit green. So they're going to be able to, in most cases, take your money and move on. And so think of this type of trade as one of those trades where more often than not, statistically, you're going to be right. But if you're wrong, you're going to pay more than if you're right. If you want to trade where you have a high reward ratio and you're looking for Facebook to actually move to new highs, let me show you this. So I looked at the call options. I looked at butterflies. This is a butterfly trade, by the way. Limited risk, limited reward. I didn't like this trade. And the reason I didn't like this trade is because the risk was $500 and the reward was $800 up here, but you had to hit right there at the target. You had to be at the 380 level on expiration Friday. I just didn't like this trade. It didn't offer me that 5-to-1 return. It was what it was, basically 1.3-to-1. So I did look at the regular bull call spread. And the regular bull call spread looks like this. All right. Buying the October 15 360 call and selling the October 15 370 call. And be able to put that together. And you could do that for $250. So the October 15th 360 370 call spread, buying the 360, selling 370. Right now, that's trading for around $2.50 per spread. It's going to cost you $250 plus maybe a little bit of commission. Now, that is a 10-point spread, 360, 370. That means this trade could widen out. If we're at 370 or above by October 15th, this trade could be worth $10. If you pay $2.50 for something that's worth $10, you make $7.50. Right? Some of the neat things about this is that if you take a look at, look at what these 360 call options were trading for, 470 by 485 at the time. You're talking about something that you'd have to be at 360, 485 to break even, but with the spread, you're at 360, 250. You've got a better break even to expiration. It's one of the reasons I like spreads. I don't like spreads as short-term trades because the side you sell eats away a lot of the profits of the side you buy. But if you're looking at this in terms of 1 week or longer, if you're going to be in the trade as a position trader, these tend to make a lot more sense in my mind, especially if you're looking for a stock to go higher and you're risking a smaller amount just in case it goes against you. All right, so that is our high reward trade, as you can see here. Buying the 360s, selling the 370s. All right, so questions, comments, etc., guys, as we kind of round out our time together. Okay, tell you about the whiskey story real quick as I'm waiting for some final comments from the group here. Okay, you got it. Those of you that are going to, going to wine tasting experiences, upstate New York has a couple of them that are great. Marble in New York is really nice. But if you go up to Gardner, New York, all right, you'll miss it if you blink. That's how small the town is. And all these towns in upstate kind of all look the same. When and I'm talking about getting up past the Catskills, right? You get on the other side of Catskills, that's where you want to go, right? The crowds, they're not there right now, all right? The crowds are all still trying to buy homes in the suburbs. That's where the crowds are right now. So if you go up there and you check out Tuthill Farms, which is up in Gardner, New York, right? Tell them I sent you, okay? I don't know if that's going to do anything for you, but we went on a whiskey tasting experience, and I took the expedition vehicle. I'm going to tell you why in a moment. Took the expedition vehicle because we went out there on this whiskey tasting experience. It was a lot of fun, and what we ended up doing was they pulled, because we were up there to get a barrel, and they pulled 8 different barrels, and they proofed them down, and we had 8 different bottles. I mean, these were 750 milliliter bottles. They had 8 of them. There was no way I was going to get, I mean, I was eye-droppering these things, guys, because first thing we came in, they gave us a great lunch. I had whiskey sours. They did them right. They did the old fashions. They did the ones with the egg white. That's the way to have a whiskey sour, at least in my opinion. Tastes fantastic. Then we go up, we go through the distillery to show us how they grind the grains, how they cook them, how they ferment them, how they distill them and distill them and distill them, and then how they put them into barrels, and then they let them rest for years. We were tasting anywhere from 6 years old to 10-year-old barrels. Now, these guys have, they only opened up whiskey, the ability to create whiskey in upstate New York for 10 years now. It's only been around for 10 years. And so they had a barrel that was there that was literally one of the first, and they put it away, and they were offering it to my wife and I, 10-year barrel. But we tasted every one of these. And, to me, when I first, whiskey tastes all the same. That's what a lot of people think. And that might be true if you're mixing it. But then I was eyedropper and stuff, and you could actually taste. For me, I don't have a great palate, but I can taste when something's spicy and peppery, and when it's not, when it's a little sweeter. I like the sweeter taste. So my wife and I agreed on, I think it was like a 7-year barrel. Anyway, so we tasted all 8 of these, and we're heating chips, and we're trying to get our palates back so we can determine the difference between these things. Long story short, we ended up with a barrel, and then the guy says, hey, before you go, we pulled these 2. These are what's called cask strength. Now, what I learned about bourbon is that, a couple things with bourbon makes bourbon bourbon. I always thought it had to come from Kentucky, and it had to come from Bourbon County, and that's not the case anymore. In order to make a whiskey called whiskey bourbon, 2 things have to happen. Number 1, you have to put it into a barrel that has never been used, and that barrel can only be used once to be called bourbon. Right after that, it can be reused for whiskey. Some of these guys trade barrels back and forth with wineries to have wine that has that in bourbon casks, in whiskey casks, etc. The second reason that a bourbon is called bourbon is that when they proof it down, and so after it stays in these barrels for years, they take it out. They have to proof it down. They call it proofing. It's like watering it down, folks. They have to water the whiskey down to get the proof below 125. That's how they call it a bourbon. But we tasted this cask strength rye and a cask strength bourbon, and it was a little thicker. It wasn't like maple syrup thick. It was thicker. And I'm telling you, that stuff tasted so smooth and so good. And I said, hey,
Why didn't you give us this first? Why? I want this. And he goes, we're not producing it yet. We don't have the authority. We don't have the authority to do it yet. We're going to be doing it in a couple of years. We're going to actually sell cask strength. You don't get as many bottles out of cask strength. Therefore, guess what? It's going to be more expensive. Anyway, we got back to Florida last week. So I left New York, back to Florida, and I emailed the guys at Tuthill Farms. And I said, hey, thank you very much. It was fantastic. I loved it. By the way, if I could get my wish list, I would love that. You really got me on that cask strength. They actually approved because we bought a barrel. They donated the barrel to charity, and we were the winning auction on this barrel, a private barrel. And they actually are going to take our private barrel, and they're actually going to put it in cask strength. So I want to say this, Zach. All right, Zach, I don't see you on here, but you know who you are. And if you're watching this or you're watching the recording, you and I met yesterday. All right, I saw you at Publix. I was in Publix with my son. We were going to get some stuff to grill out. Zach saw us in the TTR vehicle, the big vehicle, gave me a thumbs up. Then I saw him in the aisle, and he goes, hey, what are you doing on Monday? What are you trading on Monday? I said, you follow me? And he's like, yeah, I know who you are. I get all your stuff. I thought that was really cool. Anyway, Zach, I've got, when I get when this stuff gets bottled, this cask strength, it's the very first barrel of cask that's ever coming out of New York. And I got it. I can't believe that they're actually going to they approved to give me that cask strength. So I'm going to find you, Zach. I know what neighborhood you live in. I'm going to have to knock on doors. I'm going to find you. I've got a bottle. As soon as it comes to me, I got a bottle for you. All right. So you're getting a bottle of that cask strength whiskey, guys. And by the way, if you guys see me in the vehicle, honk your horn, say hi. If I'm getting out of the vehicle, come say hello to me. I'm not one of those guys who's going to blow you off. All right. So I'm happy that, I love meeting people who follow us, use our software, even traders, if you know who I am. Love to chat with you. I see a lot of folks in the Sarasota area that a couple of them are New Yorkers too, that come down into Florida, snowbirds, but love to see you. Love to say hi. Thank you all. Let me just take a quick little peek as we're rolling out of here. Crypto. Southside saying crypto. Show me some crypto, Tom. Let's take a look at some crypto real quick. So let's do this. Yeah, it's past my time, but that's okay. I got a little bit of time left over before I got to get ready for the next one. Let's go to what I'm going to do is I'm going to go to crypto tools. Now I'm doing this within Tom's option tools. All right. We have, I think we ended our free trial, but we're coming up with something else, and it's actually going to include some one-on-one time with me or the team. All right, whoever's available, we're going to do some one-on-one time, show you how we best use these tools. Something new we're putting together. So get ready for that. That's coming too, guys. But let's do this. Let me put up a chart. Let's pull up BTC. No, you know what? We saw BTC. Actually, I'll do BTC, but I'll do one more too. Coinbase. So, that's where I trade most of my coins, Coinbase. I've got a couple of private ones that don't trade on Coinbase, but I'm telling you 99%, this is where I'm going. Here's Bitcoin. Let's throw up a chart of Bitcoin. Let's put up the crypto Fibonacci. And I need to look at really about the last 80 days, I think. Let's see if this gives me what I'm looking for. It does. And let's blow up the screen on crypto. There's a chart of crypto for those of you that said, hey, I don't see the chart. Here's the chart. 30,000 down here, below 30,000. That was the 23rd, 24th. Where were we a couple weeks ago? We were at 52.6. We've had this. Look at this. Now, any of you that are Elliott Wave traders, you probably spot this big move up, and then you probably spot this ABC correction. If this truly is an ABC correction, we have to get above the 43.9 area, and we got to stay above it for a couple of days. All right, we really do. So we really did get that A down to 38, and then the C level came down. And it did take out the 50, but it jumped back above it. But we've been sticking that 50. It's been sticking that like a gymnastics sticks the vault landing. It's sticking the landing at 41.244. I want to see it go higher, and I want to see it get above and stay above 43.946 for a little while. All right, so
There's that. That's BTC. Ethereum, ETH. And these are the two crypto. That's the other crypto I'm going to end with. Take a look at this one. Also, a low below 1,800 back on in the area of 18. I bought it 25. I bought it 2,000. I own it well below that, but I bought those on the way down because I want you to know that I have skin in the game, and I continue to add skin into this game. You see that move that where we jumped up all the way to 39.5. All right, 3,952. And then we did the 1, 2, 3. We did the ABC correction. A took us down to the 38% retracement. C took us down in between 50 and 61. I need to see Ethereum get above 31.24.99 and stay above it for a couple of days, not one day. I need a 3-day move. I need to see 3 days above on both accounts that 60 or that 38% original retracement, and then I start to see that looking better to me. All right, so crypto, there you go. Lauren, you said spreads aren't the way to do short-term option trades. What do you do for short-term? Okay, I'll tell you what I do for short-term, Lauren. I'm buying call options if I'm bullish. I'm buying put options if I'm bearish, but only if I don't just go out there and throw darts at a wall. I don't trade penny stocks. In my short-term strategy, I have to see something that works short term. Okay, so give you an example. GLD. I'm probably looking at a short-term trade in GLD. I have not looked at it yet. I'm going to go out there and look at it as soon as I'm done. So I'm probably looking at a short-term trade in GLD between now and Friday. Now, if I'm looking at GLD, and let's just take a quick, I mentioned GLD at the beginning of the broadcast. I mentioned something that we called codename Panduo. And so Panduo has given us a short-term buying opportunity. So what I'm going to do is I'm going to go out and I'm going to look at my stock chart for GLD. GLD up on the screen. Let me put it up on the screen so you can see it. Yeah, I do that every once in a while. There's GLD. Look at GLD. Now it's starting to take off again. Maybe I need to get into this faster. But this is what I need to look at here. I don't need to look at Fibonacci. Fibonacci means nothing to me when I'm looking at a trade that's less than a week. Let's update that. What does mean something to me? Well, I'm going to show you. Let's take a look at that 7 to 30 day at the money IV, because this is what I'm looking at. You know what? This is tough for me because I'm seeing IV on the high side. So what am I going to do short term if IV is high? I'm going to sell those puts. I'm going to sell those puts, and I'm going to sell puts that expire this week. Maybe I'll do a bit of both. Maybe I'll sell some puts in GLD, and I'll use that money, and I'll buy some calls in GLD. That's called a synthetic long. Okay? If I bought 100 shares of GLD, and I was going to pay 165, that's $16,500. Is that right? Yeah, $16,500. But if I were to sell some puts in GLD, I'm going to pay 20% of that in margin. I'm going to tie up that. And I'm going to use the credit, and I'm going to buy some calls with that. I'm still only putting up 20% of that 16,500. So it's a way of getting into GLD for a week that mimics buying the stock, but I don't have to put up as much cash, right? So that is a form of secured cash or secured puts, cash secured puts, but I'm basically robbing my piggy bank of the premium, and I'm going to buy calls with it. So that's a couple ways that I'll do that. Klaus, thank you very much for the comment. Southside, appreciate it. Michael, Fast Fortune. So we do Fast Fortune recommendations on a regular basis. As of this moment in time, I don't have one, but stay tuned if you're a Fast Fortune Club member. In fact, if you're a Fast Fortune Club member, you're going to see some really cool things happening very, very soon. We are going to be upgrading you in a major way. We're going to do several upgrades. All right, Michael, the first upgrade we're going to be doing is you're going to be getting weekly live sessions with me, yours truly. And we're going to talk in that room about what it is we're doing. All right. Fonda, glad to see you too. But Mike, that's the plan for us. Fat Fortune Club. By the way,
any of you that follow our tools, we're going to be doing this as well. We're going to be doing some stuff with our tool members. We're going to be doing those once a week. If you follow our publications, we're going to be doing stuff with our publications once a week. We are basically going to be tilting more toward the live sessions and tilting less toward videos. Okay? You're going to be looking over my shoulders, my team's shoulders, nearly every day the market's opened. All right? That's what we're doing. We're coming to you in a big way. And yeah, I got to pay my team more money to do this, but I'm willing to do that because I want to up our game. I want to up our game. You know, my guys, my team doesn't work for free. They got all these nifty tools. You know, we have access to each other, but I still have to pay them. And I pay them a very nice amount. But I got to pay them a little bit more because I want them out here teaching. I want them out here teaching with you. We want to put this stuff out on the YouTube channel. Those of you that just showed up here, if you showed up late, my plan going forward is very soon, you're going to be seeing live trades happening on YouTube, live trade sessions every day. Our goal of these live trade sessions is to educate you on how we do this stuff. All right. I can tell you what we don't do. We don't sit around. We don't look at this kind of stuff happening on the, on a tick by tick basis. Look at these 1 minute charts. All right. Here, let me show you. Let me take you to another channel. All right. When I mean take you to another channel, I mean, let me take you to what other people are doing. These are what other people are doing. They got their channel out there. They're like, oh, Facebook's going up. Oh, GME's going up. GME. I'm not dogging them. Okay. I'm not. There are people that like to follow emotion. There are people that like to get into and trade emotion. To me, that's a fix that people need in their life. If you need that kind of a fix, I mean, there's other ways to do it that it's a lot cheaper. I think if you go to a casino, you can get your fix at a casino, and that's a cheaper way of doing it than doing it here. There are people that are taking stimulus checks and they're throwing caution to the wind, and they're buying, and they get suckered in to a move like this, not realizing that from 185 to 192, that half of that's coming back. Mean reversion, baby. And that's exactly what ended up happening from about 1021 to 1028. It only took 7 minutes, and it took that back. And I'm telling you, people are not buying it down here. The big, the impulse buyers are buying it right here. And then they're saying, what did I do as it comes back down? You know what they're doing? Then they're selling out. They're taking a loss. I don't want you to do that. What I want you to do is I want you to learn a skill. And the skill that I want you to learn is how to spot rules-based opportunities. And then I want you to learn how to buy alternative trading strategies like options, when to buy them. You know, Lauren just asked me, when do you not trade spreads? Well, I buy calls and I buy puts, but only if they are at the right prices. I like to buy cheap. I like to sell expensive. And I looked at GLD. GLD doesn't look cheap to me right now. I have to figure out a selling strategy for GLD. And then finally, and this is the part where we got to spend a little more time putting this together. Plan, execute, manage. That means using your broker's platform. Now, this is the part where we don't tell you what broker to use, right? I don't get paid to tell you what broker to use. That's who you use is your business. Who you use is really, you'll never see me do a video, guys, that says, go to Robinhood and get a free stock, because then I'm going to get paid too. No. Go to Webull and get a free stock, and I'm going to get a free stock too. No, I don't want to. I'm not in that. Okay. So we do monetize this channel. I mean, I'm not going to say we don't, but all of our proceeds, all of our profits to this channel, and then some, go to charity. Okay. You know that whiskey barrel that I got? All right. Well, part of that was from the YouTube channel, the YouTube community. All right. Allowed us to donate that. And in this case, we donated it by way of a charity auction. So it went to, I believe that one went to the firefighters out in California. who are still fighting fires, believe it or not. And so, by you being here in the room, by you watching the ads for a few seconds that pop up, you're actually helping out people. It's not going in my pocket, folks. I don't need the money. It's going in and out to people who do need it. Okay. So there you go. Are the subscriptions coming back? What subscriptions are you referring to, Philip? I'm not sure what you're saying there, buddy. Vika, thank you, Tom, for all you do. You're the best. Thank you, Vika. You're the best. Thank you very much. Fonda, I'm excited that you're excited. Bill, thank you very much for the comments. Roxanne, I love it. You know what? I love the brainstorming too. People say, well, if you're such a good trader, why do you do this? I hear that all the time. I do hear it all the time. Any of you that have been on here, you've seen, I'll throw my account, especially my crypto account up there. You can see what's happened with that just in the last year. I've even thrown the small accounts up like Robinhood because I do small accounts because I want people to realize that it doesn't take a big account. We're all the playing field's kind of been leveled. I'm bringing up my Robinhood account right now. And it's down a little bit today. Where's it for the last quarter? There you go. There's the last quarter. I'll put it up there so everybody can see it. I'm not shy. Look at this. Let me see if I can see that. Is it backwards? If it's backwards, it's up 37% for the last quarter. All right. I do the same type of trades in a small account that I do in a big account. And they're all based on spotting opportunity, creating a low risk trade, plan, exiting, and managing the trade. It's the same thing. Guys, it's the same exact thing. Okay. And so, Jeff, are you sending out bottles to your partners? It really does depend on how. You know what? I'm working on something. I can't ship alcohol. Okay, I can't even take alcohol to a distillery and have them ship it. I can't do that. I've looked at wine. You can do that with, but bourbon, especially something that is actually not even available. I couldn't do that. But if you're standing in front of me and I've got bottles, I'm giving you one. Jeff, you and I are going to have to meet up. All right. I know most of the time you're on the other side of the world. Where are you these days? Are you in China again? Or are you back? Are you back in Texas? You and I are going to have to meet up. And when we meet up, I have a bottle for you because you and I have known each other. How long? Jeff, how long have you and I known each other? All right. You follow everything that I do. Party at Tom's house. So, and so, yeah, I mean, every year we do something with our partners. We try to do something special with our partners. I don't know what the ratio is. When they cask this stuff and they give it to me, I'm going to have a lot less bottles than I typically do. I mean, that wild turkey that we did a couple of years ago, you had a bottle of that, didn't you? That wild turkey we had. I mean, that was, I gave a bottle of that to all of our partners. The wine, we bought a barrel of wine and we had that. I still have that wine. I still got wine. I still got wild turkey because that was proofed correctly. And, you can get 300 bottles out of a wine. I still got cases of wine left. So, yeah, 13 years you've known me. Absolutely. So, guys, Michael, I hear you. I'll meet you anywhere for a bottle. You know what I got to do? I got to start carrying some of this stuff around the expedition vehicle. If you find me in the expedition vehicle, and it's not hard to find me in the expedition vehicle. I mean, I'm driving around. That thing is, it looks like an army vehicle. You find me, and I'm not driving. If I'm stopped and you pull over with me, I'm gonna have something in there that I'm gonna give to anybody that finds me. So keep that in mind. I'll have something for you if you guys find me in the TTR vehicle. Anyway, thank you all very much. I have got to go, but thank you so much for hanging out with me. I enjoyed it. We're going to be doing more of these live streams, and I look forward to it. I hope you do too. We'll see you soon. Bye, everybody.